Now let's start a mad dash and discuss a little bit about Nvidia. Naturally, the well-known CEO and company founder Jensen Huang will be present at Goldman Sachs Communicopia conference. He will be on stage with Goldman Sachs CEO David Solomon very early in the morning, Pacific time. They're going to talk about Nvidia, and I've heard rumors that the company's growth is slowing down. That is just untrue. There isn't any pause. However, there is a complicating factor. Although this new chip from Nvidia is tremendously powerful, it is also exceedingly difficult to manufacture. Today saw a few announcements, including one from Nvidia and one from Oracle, the largest AI supercomputer in the cloud, which can offer up to 131,072 Nvidia GPUs to customers so they can create, train, and infer AI at scale, was the subject of their discussion. Now, trying to find out what to do with that has gotten all of us a little over our heads. What does this really mean? Was one of the many queries I asked Nvidia in a memo that I emailed them right away. Imagine how other people feel if, after 12 years of trying to grasp Nvidia, I'm still not sure what I'm doing. However, when individuals don't comprehend something, they merely hear that its price is rising and choose to purchase it. Nvidia has reached a stage where it is too complicated for the majority of people to comprehend. Thus, Jensen is needed to clarify what is happening and why it matters. Now, Nvidia did discuss Blackwell, their new chip design, and how it would shortly enter full production on their most recent earnings call. This is significant because, among other things, we discovered that the technology is desired by sovereign users. What's more, Oracle and Larry Ellison want it, and Oracle wants to play a big part in Nvidia's AI supercomputing operations. Supercomputers are more than just platforms. It won't go away, though, unless all the individuals who don't know what Nvidia does sell their stock. The stock can resume moving once those people leave. Later this morning, Jensen Huang, the CEO of Nvidia, will give a speech at the Goldman Sachs Communicopia conference. What message does the chipmaker's CEO want to get out to investors and markets? Ben Reedus, head of technology research at Melis Research, has joined us. Ben, it's nice to see you again. Considering that Nvidia's stock has dropped by roughly 23%, some are questioning if we are in a bear market. Is the knife falling, or is it time to grab the stock? Ben, it's not a falling knife, Joe, and I appreciate you having me here on this significant day, especially for New York. You may recall that Nvidia took a sabbatical in the latter part of last year. Because of worries about the macroeconomic situation, this correction is more drastic. The remainder of the semiconductor industry is being impacted by Nvidia's current product change. The drop in gross margins from their most recent earnings conference caught everyone off guard. After a decline in gross margin, semiconductor companies typically suffer until they stabilize, which I believe Nvidia will achieve in a few quarters. If folks get a chance to ask Jensen, they'll probably bring up it when he talks today. Joe, we've seen Nvidia's stock largely disregard worries about the Fed, other semiconductor companies, and global growth. Do they now consider the potential for a global slowdown? Ben, I believe that Nvidia, particularly in fields like AI, is somewhat shielded from more general macroeconomic problems. However, there is general anxiety about a recessionary climate in the semiconductor area. Nonetheless, there are still plenty of secular advantages for AI. Nvidia's core AI business is performing well, and even with the wider macroeconomic uncertainties, I believe they will continue to do well. One problem is that businesses are investing more on AI as a result of Nvidia's significant market share amplification in the semiconductor industry. Other industries are impacted by this change. We'll need to monitor this dynamic as we approach the upcoming year. Joe, even if Nvidia's margins somewhat decline, they will still have enormous wealth. Should investors be concerned about a more substantial decline in margins, given the amount of money they are spending to develop the upcoming chip generation? Ben, because of the complexity of Nvidia's chips, their average selling price, ASP, should be high. These chips are highly sophisticated. They will gradually expand their offerings to include more services and software, which are higher margin ventures. Similar to Apple and other IT giants, Nvidia will develop into a more diverse ecosystem with a number of revenue sources. They are now having some production problems with Blackwell, which is short-term affecting profitability. However, once production settles down and their mix gets better, I think Marg. Joe, it's also worth considering if those large margins would garner political notice. Even when a company's margins are entirely justified, people often start to doubt it when it is that profitable. The profits that Nvidia's stockholders are receiving are definitely deserved, considering the company's leadership and vision. Ben. That's right, Joe. It's difficult to penalize a business for success and foresight, but that's the reality of the modern world. Joe. Regards, Ben. Even though the market as a whole is selling off, Nvidia's shares are holding stable today. That ought to fix the grammar problems while maintaining the original message and length originator, Jensen Huang, CEO of Nvidia, will be presenting this hour at the Goldman Sachs Communicopia Conference. We have some headlines from Seema Modi. Seema? Seema Modi. Regards, David. Jensen Huang, the CEO of Nvidia, is arguing vehemently in favor of accelerated computing and emphasizing the vital role Nvidia is playing in enabling quicker model execution inside data centers. In addition, he is defending Nvidia's server pricing, which some consider to be exorbitant. Huang made the point that although Nvidia server racks can run into the millions of dollars each, in traditional computing systems, they replace thousands of nodes. He underlined that upgrading outdated general-purpose systems with Nvidia's denser, more potent systems would cost more money even just for the cables needed to link them. Huang clarified that even if the servers appear pricey, the way they pack so much processing power into a single rack makes them incredibly valuable. Keynote speaker Solomon, CEO of Goldman Sachs, posed the important query regarding AI return on investment, ROI. Huang gave a really perceptive remark, stating that GPUs from Nvidia are cutting processing times by roughly 20 times. He claims that because there is such a high demand for Nvidia's products, every dollar consumers spend with them generates $5 in rentals for their own companies. Huang also discussed energy efficiency, pointing out that another advantage Nvidia offers businesses utilizing its technology is that training and subsequently utilizing AI models, inference, really uses less energy. Nvidia's stock is rising in response to these remarks, albeit it is still below the day's highs. David, let me get back to you. David. Regards, Seema. Despite the general market downturn, Nvidia is one of the few stocks that is currently rising, and its products will continue to be in high demand due to artificial intelligence. It's interesting to note that the mutual fund industry considers it underweight. Perhaps that community is the only one. Just to reiterate, you could have looked at the shares back when it was a $3 trillion corporation and said, they could double from here. That's why I brought up the market cap issue. Will it truly be a $6 trillion brand though? Many investors stated, well, I don't want to stick around for a 10% or 20% gain when I might have a 40% downside, because it is still $2.6 trillion. I would like to attend the double. Can this business have a $5 trillion market capitalization? It's challenging to determine. There's nothing I wouldn't rule out. Kelly, I believe you raise a very valid question. However, the same question was being asked about a year and a half ago when it was $1 billion and a half. Here we have a stock that has increased by between 125% and 130% so far this year, yet it is still just 30 times profits. That would be my main concern. It seems like a really difficult effort to understand this stock's earnings power. It's among the difficulties.